they're purchasing these GPUs, and they have Google and Microsoft. We already mentioned Meta and OpenAI as some of their customers. Their backlog stands at $55.6 billion. So look at this. Their revenue, right, is $1.36 billion. Their backlog is $55.6 billion.
Good morning and welcome to Market Outsiders. It's Tuesday, November 11th. Today, we're talking about CoreWeave, an AI cloud infrastructure provider. If you have no idea who CoreWeave is, you should, because they are an important part of the AI ecosystem. It's all you hear about in terms of economic and business news these days. They're not Nvidia, they're not OpenAI, but they are a decently important player in the AI infrastructure. We're going to break down what they do, what their latest earnings report says, and more importantly, what their forward-looking guidance says, and what insights we can extract from that guidance just for the future of this AI trend. Before we get there, we just want to wish a very happy Veterans Day to all the veterans out there. We thank you for your service, and thanks for listening to Market Outsiders today as well. Jenny Ray, before we get into CoreWeave, how are you today?
I'm good. Good morning, Naman. I'll completely admit that I picked this one today. And that my first question to Naman in our pre-call was, do you know what CoreWeave does? And so if you came onto the call feeling like you should know, but didn't know, that's exactly where I started our morning as well. So we really hope that this is going to be a great kind of tease out of the architecture of the AI space. And so I'm excited to dive in. Should we do it?
Let's do it.
All right. So one of the things that I'm really excited about, I'll just kind of share this article, is that this is the kind of continuation of insights that we've seen in a lot of other businesses where we'll see a headline that's around a stock price. And then our job is to not say, that's interesting, now I know everything, but to say, wow, what does that point to that I don't know? And so for CoreWeave this morning, it said the stock slides on weak guidance, even as revenue more than doubles. So that was very interesting to me. What it basically said is that the stock was overvalued based on what their actual performance was, but the actual performance was phenomenal. So if you were an investor in CoreWeave at the very beginning, the delivery on investment has been super strong. However, I also found it interesting, and I think that this article will go into it. CoreWeave, I do believe, is not profitable yet. So we're also looking at this very interesting early phase company. And so I think that's why I'm really excited to talk about where it fits inside the space. And as we talked about it earlier, it became clear pretty quickly. So Naman, I think that's probably a good place to start. So I'll start with the headline, and then if you want to just dive into like where does CoreWeave sit inside the architecture of the AI field, I think that would be helpful. So first of all, their stock slides on weak guidance, revenue more than doubles. Their revenue in the third quarter exceeded analysts' estimates, but guidance for the full year came in below consensus, right? So they basically said, hey, we did better than you thought that we would, but we this year might do worse than we said that we would. And that was the main reason that the stock came down. It was not based on a difference. So basically in this one, the analysts had probably just taken CoreWeave's estimates and plugged them into their analysis. They also had an expansion. They have deals with Meta and OpenAI. So what they're doing for them is going to be really critically important. If you are doing an AI case about the AI field right now, one of the basic things you have to understand is what are their suppliers, what do they supply, and who are their customers. So this is kind of what we're going to tease out. And then in addition, right, the company IPO'd in March. So again, really early to the AI game, not like everybody's really late to the AI game at this point, but 164% share price appreciation. So this is a fall off of that 164% appreciation. So when people talk about AI being a potential bubble, these are the kinds of things you see in a bubble are stock prices that go up 164% from IPO on guidance that is missed, even if you're doubling your revenues, right? So we're in a really interesting moment in this AI race right now. Naman, let's talk a little bit about the CoreWeave place inside the AI architecture.
Let's do it. I want to come back to that bubble conversation as well. So we'll put a pin in it for now. So CoreWeave is an AI native cloud infrastructure provider. That is like my 5-second definition of what the company does. And the way that I think about it is they are like AWS or Microsoft Azure or Google Cloud, but for AI native applications. So they're a cloud provider. That's what they do. But like AWS, like offers cloud hosting for all sorts of different use cases. CoreWeave says, like, we are here to provide compute for AI applications. That's it. We're specialized. That's all that we do. And so what they're able to do, what they were able to do is enter the market with a really strong point of differentiation. And they're able to provide a standardized level of computing power to these like really kind of GPU and power hungry AI applications. Follow or are familiar with the AI space at all, like this is called compute. And the more complex that your models are, the more compute that they need. And so I haven't dug into the numbers here, Jenny Ray, but I would think that one of the reasons CoreWeave isn't profitable yet is because this is a very capital intensive build out that you have to do. You need to build physical data centers. You need to go ahead and buy GPUs from suppliers like Nvidia. Like you have to distribute those data centers like across the country so that wherever your customers are, like the latency is as low as possible. And so we've thought about and talked about over the last 10 or 15 years, the businesses that have won have been asset light. You know, if you were Google, you didn't need to own physical infrastructure to be incredibly successful. It's one of the reasons the margins were so high. We're moving into this era where a lot of like the hot companies right now are asset heavy. They have to build out and own physical infrastructure. And I just wanted to call that out because you're not used to seeing valuations like this on asset heavy businesses, at least not in our generation. Like we've seen valuations like this and hype like this on asset light businesses. CoreWeave is not. And so that is my 2-minute definition of who they are and what they do.
Can you just poke into one thing that was a question that I had this morning, Naman, which is we've talked about the demand for NVIDIA chips in our NVIDIA episodes. And so one of the demanders, one of the big purchasers of NVIDIA chips is Meta, right? So you also here have Meta as a customer for CoreWeave. So that's basically a secondary customer of NVIDIA, where CoreWeave buys the NVIDIA chips and then they provide the cloud services. Why as Meta do I need my own chips as well as the service provider of CoreWeave? Can you just tease out how they're underpinning some of that architecture inside the AI space?
Yeah, I think that just goes to show you that there's incredible demand for specialized, what I'll call AI native cloud hosting, and the supply is just not there. And so what you're seeing is some of these hyperscalers are pursuing a blended strategy. They are vertically integrating as much as possible, but they are not able to like fully own all of the compute that they need. And so they have to own their own GPUs, and they also have to work with providers like CoreWeave to get the compute that they need to build, train, deploy, scale their models.
So the from the model side, are like one of the things that I'm kind of trying to figure out is, are they building the models with their own, and then are they scaling customer experience with the CoreWeave applications? Is it more external facing? Is that also a way that this is potentially bifurcated?
I think so. I think it's important to know that there's probably only 7 or 8 models that exist in the world. And then like there's a lot of applications that are built on top of the models. But Meta, for example, actually has its own LLM called Llama. And so then on top of that base layer, you have a lot of different applications. But because Meta actually has its own LLM, it needs a massive amount of compute to continue to train it, deploy it, scale it, right, serve it. And so like for your specific example, that would be one of the reasons that Meta is so compute hungry. But like, you know, when you look around and you're like, oh my gosh, there's so many like AI models out there, like to the best of my understanding, that's not actually true. There's a lot of applications that are using code from like a very small like subset of models.
Good.
And so I don't want to get too into the weeds, but that is my best understanding of what the ecosystem looks like right now.
I love it. Let's dive in just a little bit more to this, and then let's go back to the bubble conversation. So basically CoreWeave, right, provider of our infrastructure for artificial intelligence companies, dropped 6% after outperforming their third quarter revenue numbers. That just feels like a t-shirt, an AI t-shirt to me. But here's how the company did. They lost 22 cents per share. Their revenue was 70 million, so 1.36 billion versus 1.29 billion expected. There are a couple of, though, really interesting kind of like customer conversations in here, Naman, because when I think about this, I think like if you can't explain it simply, you're not ready to talk about it. So it's really important to think about who are my suppliers and who are my customers. It says their growth is tied to the AI boom. So this is basically a re-articulation of what you said before. If I'm Meta, I buy Nvidia. If I'm using CoreWeave, I'm renting Nvidia space, essentially, right? So I'm moving to I as CoreWeave am an asset heavy business providing an asset light infrastructure that is
To
faster
my
and more
customers.
nimble to my customers. And so they're purchasing these GPUs, and they have Google and Microsoft. We already mentioned Meta and OpenAI as some of their customers. Their backlog stands at 55.6 billion. So look at this. Their revenue, right, is 1.36 billion. Their backlog is 55.6 billion. So this is where companies like I grew up near 3 Mile Island. That explains a lot, right, Naman? So near 3 Mile Island in Pennsylvania, but 3 Mile Island has been defunct for many years, right? It was shut down. It was latent. And I had a good friend at a dinner party when I was home in Pennsylvania a couple of months ago who said, I'm working on the reopening of 3 Mile Island, and we're working with Microsoft on it. And somebody came and said, hey, can you get this done in a month? And they were like, can we open a nuclear power plant in a month? No. Right. It was originally slated to be a 24-month project. They were squeezing it down to 18, but it's not just GPUs. You actually need power as well. You need power, not just computing power in order to power these data centers. And so
Absolutely.
I thought that was also super, super interesting. So anyhow, they're measuring the compute in gigawatts, but they also need the contracted power, specifically the direct power that they're going to have to power these.
Mhm.
They're now seeing 2025 revenue come in between 5 and 5.15 billion. So the analyst average was a little higher than that. That's the main reason that their stock price is down. But this is, as far as I can tell, one of the most critical and one of the only companies that is providing this service inside this space. Now, do you know what the competitive landscape looks like for this rented compute?
I don't. That would be one of my first questions. If I was building a framework, right, to examine CoreWeave's business, I'd absolutely have the competitive landscape as one of my top two buckets. And I'd want to go ahead and examine not just like who else is building out infrastructure, but what their customer base looks like geographically, where their data centers are. Um, uh, you know, I think if you're looking at the competitive landscape, this really just comes down to capital. You have to build first. That's why CoreWeave's not profitable. You have to
And
build
why they
first,
IPO'd almost
and why they
immediately.
IPO'd, because they needed liquidity like very fast, right? And an
Yes.
infusion of
Mhm.
capital. So, and it gives you the ability to pay your early investors back out. And so, uh, look, if I am a Meta, if I am, a company that needs AI enabled cloud infrastructure, I'm gonna go with who's available right now because I have demand now and supply is so constrained, and I am very price inelastic. Like if you listen to the earnings calls of the hyperscalers, they are telling shareholders, "Hey, look, we are going to continue to spend at like an outrageous pace, like through 2026, in terms of our AI build out." And
Human
investors so far are
capital.
not blinking.
Yeah, human capital, chips, and now
Yeah,
these data center
yeah,
contracts.
and investors so far haven't blinked an eye. And so up until this last week, and we can talk about that as well. Like there's a story playing out in the markets over this last week. But generally speaking, the CEOs have gotten the okay from investors to say, hey, spend what you need to spend to go ahead and not be last in the AI race. And honestly, if you are a Meta, if you're an Amazon, what's a couple $100 billion to you? Like if you end up overspending by a couple $100 billion, who cares? Like you'll be okay. I think that's the way that they're thinking about this. And so like the spigots are turned all the way on. And so if you are, if you're a CoreWeave, if you're in the competitive set of CoreWeave, like your job is to build out your data center shells as fast as possible.
Mhm.
Like that is your bottleneck. They've actually done the hard part is they figured out the technology and they've built a customer base. I would think the relatively easy part now is the actual build out. And that's why this has the potential to sound really stupid. But when I think of CoreWeave, I think of Airbus and Boeing. Because I think you have this like massive backlog of orders that you cannot fulfill all at once. And so like if you're a Boeing or an Airbus, what you focus on is, yes, you continue to sell a book of business, but what you actually focus on is manufacturing efficiency. And so like if I'm CoreWeave, like what I'm thinking about right now is not just how do I continue to sell, but what do I need to do to remove roadblocks from the actual build out process? That means working with state and local governments. That means working with power utilities. That means working with contractors. That means continuing to, raise capital if I need to. But that would be, I think, the strategic focus right now for a company like CoreWeave. And it sounds like they've got the runway to continue to sell the story to investors, that the revenue is there and it's going to be there. We need to spend the money now, though, to realize this future revenue.
Well, one little moment of conversation tying in public policy, which we'll weave in every once in a while here, I can almost guarantee you that there are very few of these data centers going into California, despite our population here, and probably many in Texas and Ohio and places that are incredibly rapid in terms of permissions and building. And you see here, there's only 41 data centers in their portfolio. If we kind of scroll down right here, right, there are 41 data centers in their total portfolio. And we're talking about a $5 billion company with these other contracts from their customers, $14 billion from Meta, $6.5 billion from CoreWeave. Like, these contract sizes eclipse the size of the business right now.
Yeah.
And so essentially this is an open checkbook where the clients are saying, look, if you give us more, we'll buy all of it, and we'll buy it as quickly as we can. But only 41 centers that's rapid in what is probably a year to a year and a half old business, but it's still really small, actually, in terms of what
It's still small
could look like.
And it opens you up. It's concentration risk, because if one of your data centers goes down, now what is that, 5% of your data center capacity? Like, if it's evenly distributed, that's a big risk. And so you don't just want to continue to grow because the demand is there, but every data center that you add distributes risk amongst your portfolio. You want that as well for redundancy's sake.
Yep. So, and this is, by the way, this is only, I didn't look into CoreWeave, but first thing that we're going to do is we'll post the actual analyst call. The benefit of them being public is that we can dig into more information about them. They probably have not even filed a 10K because they just went public. So we're looking at 10Qs for these. But a lot of the interest in this space is incredibly important to understand in terms of what their actual infrastructure is, where they're spending their cash, and where the footprint is. But my best guess, Naman, is that those 41 data centers are US only. In fact, I was thinking earlier when you were talking, like, this is a national security risk to have these data centers and only 41 of them. It's not just a concentration risk or a customer risk, but the AI race is a part of international, right? It's a part of cyber. It's a part of the entire compute power in the world that's being developed right now, and advancements in AI, which is one of the reasons why Nvidia deals with China were such important pieces of early negotiations around tariffs, because having the ability to build this is a national security concern, not just a business concern. Speaking of which, they actually also specifically mentioned that they had a challenge with one of their third-party data centers, and they have at least one unnamed customer. My best guess is that that customer is the US government, but I don't know. What do you think?
I will not speculate, but I don't think that's an unreasonable guess.
So yes, the sixth contract from a leading hyperscaler, right? It's like, okay, we've seen who a lot of the folks are. Amazon, I don't think, was listed on this list, so it could have been Amazon, but there's a pretty small number of people that are investing this kind of capital into this kind of infrastructure right now.
Or it could be a company like Palantir, maybe.
Correct.
If you run a small or medium-sized business, you know how fast cyber risks are evolving. That's why I use Nord products myself. And for businesses, there's Nord Stellar. It's a threat exposure management platform that helps you spot cyber threats before they become full-blown incidents. Nord Stellar combines data breach and dark web monitoring, attack surface management, and cyber squatting protection, all in one platform. It gives you real-time visibility into leaked credentials, exposed assets, and impersonation attempts so you can act before attackers do. Think of it as seeing what hackers see and fixing it first. Right now, Nord Stellar has an exclusive Black Friday offer. Unlock 20% off with code BLACKFRIDAY20, but only until December 10th, 2025. Visit nordstellar.com/simplified to secure your business today.
So I thought this was interesting. The company remains supply constrained. We've talked about this. So what is their challenge? It's not customers. It's not capital. Actually, it's just that turning on one of these data centers actually requires physical infrastructure, which isn't something that you can just throw bodies at. You have to you have to have a site, you have to have government permissions, you have to have the infrastructure, you have to have the supply from someone like Nvidia. Nvidia's success has largely been built off of its supply constraint right now, because that creates this inelastic demand curve. So you said you wanted to revisit the bubble conversation, Iman. Speaking of inelastic demand curves, can we talk a little bit about how this might feel similar to other bubbles that we've seen, and whether this is similar in a way that is a bubble or similar in a way that is not a bubble?
So I'll just say first, when you think about bubbles, you just think about 70-80% drawdowns in the stock. So when we talk about bubbles, we're not talking about economic reality, we're talking about market reality. So we're talking about what's going to happen in the stock market. I don't think we're there yet. I think honestly what we are experiencing right now is like a capex bubble, if you could call it that. Like these are just like stupid amounts of money that are being spent, right?
Mhm.
And so like I think at some point you're going to start to see like that capital expenditure flow slow down. If you listen to the earnings calls from the hyperscalers, it sounds like that's probably going to be 2027 or 2028. And so then there are going to be downstream effects in the ecosystem, like if and when that capex slows. And so like will you have like a bubble environment for some companies or some investors? Probably. Like, are we in like a .com era type of bubble where like it's going to affect the broader market? I don't think that we're there yet, but there are much smarter people than me who have followed the markets for much longer who would say differently. That's just my perspective.
This is also interesting. I kind of wonder if CoreWeave was in that initial conversation, right? They're building their own data center infrastructure from the ground up in Pennsylvania. I doubt that the concentration is in the Northeast, but it is possible that they're there. So our hot business tip of the day is go build another CoreWeave, right? Because CoreWeave is building as fast as they can and still can't build enough. That's kind of one of the things that you do in a bubble, right? Is that you figure out like where the bubble is actually supplying cash, and if there's cash available. This is, Naman, we should get off this call today and we should build, Weave
We
Core,
should. Well,
right?
what I was thinking here is like, yes, there's specialized technology. Yes, like there's a moat around the business because like it's capital intensive. But like, why did CoreWeave succeed where others most likely failed? Like, as we've been talking through the business, I've just been thinking, oh, the CEO knew how to raise money. Like, you had to go in, you had to tell investors a story, and you had to raise capital. And the company that raised capital the most successfully was probably the one that was going to succeed here, or at least be kind of an early leader in the AI infrastructure race. And so I don't know who the CEO is. I don't know the backstory of CoreWeave, but when I'm looking at this, I'm like, oh, okay, like you were able to raise capital well enough and early enough. And how do you do that? Like, you're able to like paint a picture of a future that doesn't yet exist. And so as I'm thinking about this, I'm like, yes, should you go learn like how to work with AI? Yes. But like, what if you actually want to build the next CoreWeave? You can't just be a tech genius. You actually have to have the ability to raise capital. And a big part of that is business storytelling.
Let's talk a little bit about this one. Speaking of business storytelling, there was a story here that they believed was critically important. Understanding why is incredibly valuable, but their shareholders, who include some of the very customers that we talked about before, didn't want this deal. So I think we need to understand where there could be conflicts of interest around the deal, but also where this deal might have been a little bit too much of a, hey, open your pocketbooks, we need to go do more. So data center infrastructure operator Core Scientific, $9 billion was estimated. I think Core Scientific is public. So again, we can link to Core Scientific's information. And if we're down in the bottom of the NASDAQ, good. This is where y'all should be spending your time right now, right? You shouldn't be spending it on the businesses that have already arrived, who are already making headlines. Understanding these businesses are exactly where you should be spending your time. But Core Scientific shareholders voted against the proposed deal. So CoreWeave wanted it. Core Scientific didn't. Was it because there were two cores in the name, or was there another reason?
Well, Core Scientific's leadership wanted it, right? But shareholders voted against it.
Correct.
And look, I don't know kind of what that shareholder table looks like. I'm sure that for Core Scientific, like there was quite a few institutional investors that kind of make up the majority of that shareholder table. I don't know why they voted against it. My best guess is they thought that Core Scientific was worth more separately from CoreWeave than it would be as a part of CoreWeave. And so I think they saw, here's my best guess, they saw the run up in AI adjacent stocks and they said, hey, like our share price is going to continue to appreciate. Whatever premium CoreWeave is paying on today's share price is less than what we think the stock's going to be worth in 6 or 12 months. And so that would be my best guess as to why shareholders voted that down. But I have not dug into that. I don't know. It is an interesting subtext, though, to this story.
It is. And this is why we're always really interested in having you not just understand headlines, but the depth of understanding from a business acumen and a industry architecture perspective comes from these second to last paragraphs when they're commenting on each of these pieces. The last thing that I just wanted to mention here, speaking of second to last paragraphs, is the last paragraph itself, right? The capital expenditures in 2026 are projected to accelerate. So well in excess of double of the total from 2025. Some of that is that they've had a significant capital infusions and they have these blank check contracts from some of their actual customers, but 12 to 14 billion in capital expenditures is crazy because their estimated revenue this year was 6, right? So this is not looking, their aim is not profitability. Their aim is owning architecture in this space right now. Naman, you mentioned something in our pre-call around the Cisco tie between the interwoven nature. I think we should end with that because I think it's something that people who may be listening to this wouldn't remember, but would be really interesting insight. And I think if you want to study the future, you should study history. So let's look a little bit at that as we close.
Yeah. Well, one of the interesting things about Corey is that you have some of their suppliers and some of their customers, generally from what we can tell, also have equity stakes in the company. And so you almost have this like what I'll call a circular economy, right? So like Nvidia is a supplier of mine because they, I buy GPUs from them, but they're also a shareholder, right? Like that's kind of how like I've been able to finance this build out so far. And so how does that work?
Suppliers and customers, both as shareholders of.
So then I cannot exert any power over my suppliers if they're also my shareholder, right? And so
with your customers, right? So they
with my customers.
In a period of inelastic demand, that works because the customers are actually becoming investors so that they can have access to the capacity that you have.
Absolutely.
If you ever have excess
and you need it,
that inverts.
But you need the capital. And one of the reasons that your share price is appreciating is because you can say you signed a $6 billion deal with Meta, right? And so like, what's one of the concessions that Meta can extract from you? Hey, like we want equity, right? And so who knows how this plays out, but like, if this is a bubble and if it bursts, CoreWeave's going to be stuck holding the bag.
I think it's a really interesting piece of the architecture. I feel like after our conversation, Naman, I know and understand a bit more about this. I also have developed an increased curiosity to understand a bit more of the underpinnings of AI. So as y'all are getting bombarded with Instagram ads about how to use AI to scale your business or your workflow, pay attention to this because like Naman mentioned earlier, that stuff is at the application level. There is significant opportunity at the application level, but this is where the big dollars are being spent, and this is where constraint in the space could affect everything downstream or where capacity becomes a strategic advantage. So we hope that you enjoyed this conversation. And if you haven't already liked, subscribed, or sent us a message about your favorite episode or insights that you've gotten and how you've used them, we love to hear from you. Our listeners matter a ton to us, and we're always excited to get those notes from far beyond, probably powered by CoreWeave's data centers. So thanks again for joining us today. We'll see you next time on Market Outsiders.